The Strait of Hormuz was open, then within a very short period of time, it's closed again. And the US say that Iran, you give me your uranium, then I will give you back your frozen dollars, your frozen money. Then after that, no, you give me the US say, you give me your uranium. I will think about whether I want to return your money. So it's all this flip-flop of things that make the investors, traders, fund managers very anxious, very cautious. That's the sentiment that we expect in the coming sessions. Hi, Leslie Khoo here. Now, all these investors, traders, fund managers, so on and so forth, they are very cautious now, more cautious than the previous weeks because of the many flip-flop of things happening. So, these sentiments, how does this sentiment impact the oil and gold prices in the coming sessions? Let's look at the oil price. At this moment, after the Strait of Hormuz closed again, and investors, traders, fund managers, the market sentiments will be monitoring what's going to happen, what Iran is going to do next, what the US, Israel are going to do next. So at this juncture, we should see the oil prices trading in this range. But a slight trigger will bring the oil price up to $100 and very fast. The moment it touches $100 per barrel, it will go up to $110 per barrel. And at that time, the $120 per barrel is not, how should I say, is within reach. So in terms of the oil price sentiment, it is very fragile because of all the uncertainty that is crowding the market sentiments. Now, let's look at the gold price. At this moment, the gold price are expected to trade in this region, with the top side still at $5,000 per ounce. But because of the fluid situation, the uncertainty, so on and so forth, the probability is high for the gold price to flip and being pushed down to a lower trending region. Because if the oil price go up, the expected or the foreseen higher demand for US dollars for the more expensive oil price will lead to the sale of precious metal and US dollar assets, for example, the US treasuries. So that will push the gold price down to a lower trading region. At this juncture, I still see a very firm support at $4,000 per ounce. Because at this moment, at that level, it will attract buyers, especially the central banks. For example, the Central Bank of China will come in and start accumulating gold again. So I see a firm support at $4,000 per ounce. That's all for this video. Thank you for watching. See you in the next one.